Hello, traders. Welcome back to our channel. Today, we're diving into an essential technical indicator that can enhance your trading strategy, the volume-weighted moving average. In this video, we'll explain what the volume-weighted moving average is, how to set it up in TradingView, the best settings for different time frames, how to interpret buy and sell signals, and how to use it in combination with other indicators. Stick around for some valuable insights. What is the volume-weighted moving average? The volume-weighted moving average is a unique variation of the moving average that takes trading volume into account. Unlike the simple moving average or the exponential moving average, the volume-weighted moving average gives more weight to price movements with higher volume. This means that it can provide a more accurate reflection of the price action by considering both price and volume. How to set up the volume-weighted moving average in TradingView. Open TradingView and choose your preferred chart. Click on the Indicators button at the top of the screen. In the search bar, type Volume-Weighted Moving Average and select it from the list. It will now appear on your chart. Best settings for different time frames. The settings for the Volume-Weighted Moving Average can vary depending on your trading style and time frame. Here are some recommendations. For day trading that is 1-minute to 15-minute charts, use a shorter period, like 20 or 50, to capture quick price movements. For swing trading that is 1 hour to daily charts and medium period, such as 100 or 150, helps to smooth out the noise while capturing significant trends. For long-term trading that is weekly to monthly charts, use a longer period, such as 200 or 300, to focus on major market trends. Interpreting the volume-weighted moving average for buy and sell signals. A buy signal occurs when the price crosses above the indicator. It indicates potential upward momentum, especially if the volume is high. This can be a good entry point for a long position. A sell signal occurs when the price crosses below the indicator. It suggests potential downward momentum. High volume during this crossover strengthens the signal, indicating a possible short position. Using the volume-weighted moving average in combination with other indicators. Combining the volume-weighted moving average with other indicators can improve your trading decisions. For example, pairing it with the Relative Strength Index, RSI, can provide a more robust trading strategy. If the price crosses above the volume-weighted moving average and the RSI is below 30, this can be a strong confirmation to enter a long position. Risk management. Always remember that no indicator is foolproof. It's crucial to use proper risk management techniques to protect your capital. This includes setting stop-loss orders, diversifying your portfolio, and not risking more than you can afford to lose on any single trade. That's all for today's video on the volume-weighted moving average. We hope you found this information useful. If you enjoyed this video, make sure to subscribe to our channel and hit the bell icon so you never miss an update. For more in-depth articles on indicators like the volume-weighted moving average, visit our website, brokercheck.co.za. Thanks for watching and happy trading.